In this video, we'll speak about the most successful and wealthiest investors, as well as about their investment strategies. Because most of them, if not all of them, did just that to get extremely wealthy. So why not simply duplicate their portfolio in its entirety? When we think of well-known investors, we usually think of Warren Buffett, Ray Dalio, Cathie Wood, perhaps Bill Gates, and Ken Griffin, who last year operated the top hedge fund in the world, where many investors lost a ton of money. That fund generated $16 billion last year. So that every one of us may grab a piece of the pie, I'll go over the top choices in each of their portfolios before showing you precisely how to invest as they do. Have you checked out my awesome videos yet? Every week, I give you short entertaining video, so you can easily learn about personal finance. You don't want to miss out on this opportunity. If you haven't subscribed yet, just click that button and turn on notifications. Okay, so to get things moving, I'm going to start with Warren Buffett, who is one of my favorites. Let's have a peek at his portfolio. Now, you can easily check out the portfolios of all of these investors by performing a quick Google search. In order to determine what they are seeking to invest in through their investment strategy, I won't go over the full portfolio but will instead focus on their top 5 holdings and any holding that has a significant position in the portfolio. We have to pay close attention if they are making any sizable financial commitments to any of these projects. Apple is the top stock in Warren Buffett's portfolio, with a massive majority exceeding 46%, which is ridiculous for any investor. Bank of America comes in second with a 9.09% market share, followed by American Express at 7.69%, Coca-Cola at 7.63%, and Chevron at 6.65%. He places a lot of value on reliable financial institutions, the healthcare industry, the energy sector, and more lately, technology. Before investing in any firm, Warren Buffett conducts extensive study, and when he approves of something, he bets large. And when he believes in something, say Apple, he isn't hesitant to place the majority of his bets on one business rather than spreading it out for the purpose of diversification. Ray Dalio's portfolio will be the next one to be reviewed. American billionaire businessman and hedge fund manager Ray Dalio served as co-chief investment officer of Bridgewater Associates, the largest hedge fund in the world, from 1985 until his recent retirement last year. However, he didn't stop investing. He is well known for his all-weather portfolio, which is designed to perform well over time and provide profits even in bear markets. Compared to most, he owns a lot more bonds and fixed income, with just 30% in equities and the remaining 15% in commodities. In any case, he places a significant amount of his portfolio's value in the relatively safe sectors of healthcare and consumer goods. He has also been very open about making investments in emerging economies. It should come as no surprise that his largest holding, 5.3% of the portfolio, is an emerging markets ETF. The S&P 500, Procter & Gamble, and Johnson & Johnson follow at 4.8%, 4.3%, and 3.4%, respectively. Pepsi, Coca-Cola, Costco, McDonald's, and Walmart are among those at the top of his list. Investing in highly strong and safe firms that make goods that people will buy regardless of the state of the economy is, of course, a very strong and safe investment approach. The next person on the list is Bill Gates, who has a really fascinating portfolio. Bill Gates is the creator of Microsoft, therefore he doesn't really require an introduction. His interest in charity has increased recently, and his investment portfolio is really set up as a trust for his foundation, the Bill and Melinda Gates Foundation. As a result, they pick businesses that satisfy their criteria in terms of ethics and other considerations rather than investing in the most lucrative or largest businesses. Only 22 stocks make up the portfolio, and the portfolio's top 3 account for more than 60% of it. Unsurprisingly, Microsoft ranks first in his portfolio with a 31.05% share. Yet the following one, the Canadian National Railway at 17.74%, was undoubtedly a surprise to me. Waste Management came in third at 15.77%, and after that, the rankings really start to decline. Caterpillar and Deere would fill out the top 5. Just like Dalio's portfolio, this one is all about playing it safe and investing in stable companies. You won't have to worry about losing half of your money overnight with these picks. But compared to the other 3 portfolios, this one is completely different. Definitely a portfolio worth checking out. The portfolio of this individual is unquestionably comprised of boom or bust ventures. Cathie Wood, the CEO of ARK Invest, is the investor in question. Her portfolio therefore places significant emphasis on both technology and healthcare. Tesla is in first place with 8.3%. Coinbase, with 7.8%, ranks second. At 4.5%, Roku comes in third. UiPath is ranked 4th with 5.2%, and Block is ranked 5th with 4.9%. These are all forward-thinking companies attempting to disrupt not just their own sectors but also several others at once, particularly those based on cryptocurrencies. However, one thing to note is that while one of the options, Tesla, is killing it and is up over 225%, all the others are extremely down. But that's what happens in a captivating portfolio. If you make a winning prediction, you'll win big, but if you don't, it hurts. The final investor we're going to take a look at is believed to be worth $21 billion, so he surely has some investment experience. Citadel, the top-performing hedge fund last year, was founded by and is still led by Ken Griffin, who also serves as its chairman. His portfolio's top 3 industries are technology, finance, and healthcare. There seems to be a pattern developing here. The top positions in this portfolio differ slightly from the rest since the top position in this portfolio only accounts for 1.4% of the total positions, indicating that there are several positions in this portfolio and no single stock accounts for a significantly larger portion. Nvidia holds the top spot with 1.4%. Next, Meta appeared at 1.3%. With 1%, Adobe comes in third. The ETF QQQ, with little under 1%, comes in at number 4. Fifth, and again at little under 1%, is JP Morgan. So, we have a ton of information on the decisions these people make, the investments they make. What are we supposed to do with this knowledge? You should first take a look at the whole portfolio and the kinds of businesses that these investors are picking to invest in. Look at the diversity they've chosen, or not chosen, and start making assumptions on why. In terms of prospective investments, you shouldn't necessarily be concerned with how their portfolio is set up. But, if you appreciate the way a particular investor analyzes or makes choices, you should specifically look at what they are doing right now or this year. For instance, a lot of individuals claim they invest in Coca-Cola because they believe that if Warren Buffett thinks it's good, then it must be good for them. The issue is that, at least given the size of his current portfolio, I'm not convinced Warren Buffett would choose that business today. I am sure that if he started out today, he wouldn't be regularly adding that to the portfolio because he purchased all of his shares between 1988 and 1994. He purchased it at an absurdly low price. In 2012, during a significant decline, he did purchase further shares, but it was his final transaction. People seeking to profit from Coca-Cola in the same way that Buffett did are in for a bit of a rude awakening. Keep it clear, I believe that Coca-Cola is a great firm, a good investment, and provides an attractive solid secure dividend. However, I do not believe that it will make you as wealthy as Warren Buffett. But you should also keep in mind that simply because these investors buy a lot of a particular stock or business in a particular quarter doesn't mean that it's optimal for you. They aren't simply picking a good investment that should do well. Instead, they are choosing a stocks in relation to the rest of their portfolio. By doing so, they will reduce their risk and diversify their whole portfolio. For example, following Cathie Wood's recent acquisition of more than $21 million in Coinbase stock may not be the ideal for you if your portfolio already includes a lot of tech companies like Apple, Microsoft, Nvidia, and Tesla because you'll be taking on a lot more risk. If the majority of your portfolio consisted of secure investments like Johnson & Johnson, JP Morgan, or even Waste Management, then it could make sense to choose some more volatile investments to add some growth to your portfolio. After everything is said and done, I watch to observe what these wise investors are doing and the kinds of moves they are making, not to find out precisely which stock they chose and then choose that identical stock. I observe it and wonder, why did they buy that? What were they thinking? By digging a little further, you can start to see patterns and tactics that make sense to you, that can help you start making a lot of money. Thank you for joining me today. If you found this video helpful, don't forget to hit the like button and subscribe to our channel for more finance tips and insights. And as always, if you have any questions or suggestions for future topics, feel free to leave them in the comments below. Until next time, stay financially savvy and take care.